So what we're seeing is that the control that China has imposed on the silver price for the last 20 odd years is now being eroded. They are now losing control of the silver price because of what India is doing. And this is happening at the same time as China in particular is selling dollars in order to buy gold. And other Asian nations are doing the same. But I can see it actually having to correct that suppression, if you like, the suppression of price for the last 20 odd years by China. That could be quite dramatic.
Gold's record-setting rally may have captured headlines this year, but silver is stealing the show with an even more impressive performance. Silver has surged by over 25% this year, outpacing gold and becoming one of the year's top-performing major commodities. Silver prices have soared past $30 per ounce, reaching their highest level since 2013, driven by a potent mix of robust financial and industrial demand. However, legendary investor Alasdair Macleod highlights a significant concern regarding China's role in the silver market. Despite securing its position as the world's second-largest silver producer in 2024 with an output of 3,600 tons, China has seen only a modest increase in production. Recognizing silver's strategic importance, the Chinese government has collaborated with J.P. Morgan to manage and suppress silver prices, allowing for continued accumulation at favorable rates. Yet, India's rapid economic growth and expanding production of photovoltaic cells are now challenging this control. Indian companies are increasingly investing in silver to meet manufacturing demands, leading to a notable surge in silver deliveries on the COMEX, with approximately 1,500 tons delivered since January. Meanwhile, China and other Asian nations are strategically reallocating their reserves from dollars to gold, reshaping the precious metals market. China's official gold holdings now stand at 2,264 tons, accounting for 4.9% of total foreign exchange reserves, the highest ever. So far in 2024, China has accumulated 29 tons of gold, and during the past 18 months, holdings have increased by 316 tons, or 16%. As China's influence over silver prices weakens and India's demand escalates, the long-standing suppression of silver prices seems to be nearing an end. This shift underscores a broader trend of de-dollarization and a growing preference for stable assets like gold. As these dynamics unfold, silver's potential to outperform gold becomes increasingly evident, offering investors a compelling opportunity in the evolving precious metals landscape. We will present clips from Alasdair Macleod's interview with Gold Australia. But before we do, if you want more videos like this, please hit the subscribe button and turn on the notification bell for more updates. Thank you and enjoy the video.
China is also a producer of silver. So in other words, China was using this as a means of building its own stockpile, strategic stockpile, if you like, of silver. And, we can see from the way silver's demand has exploded recently, that this was a very wise move by the Chinese. But from a Chinese point of view, they wanted to continue to build the stockpile. So their relationship with J.P. Morgan was to manage the price in such a way that the price was kept down and they could continue to increase their stockpile. So they controlled the price. J.P. Morgan was acting as an agent for the Chinese government, or the People's Bank, in fact. Technically it's the People's Bank, because the People's Bank has, under Chinese law, has a responsibility for gold and silver. J.P. Morgan wasn't taking a principal position in this. He was acting as an agent for the Chinese government, and presumably is still doing so. Now, so you can see that, this has sort of kept gold suppressed relative to, silver suppressed relative to gold. And this is reflected in the gold-silver ratio, which I look at the moment, is 82 times. And it has been up briefly to something, when silver fell down to $9 or something, it briefly hit something like 112, 120. So this is, in a sense, it's completely mispriced. But of course, this has now changed a bit because the Indian economy is one that's taken on the running, if you like, in terms of expansion. Things are quieting down in China. China has moved, I think, from the initial stages of economic liberalization. And that's something which now India is benefiting from. Its economy has been growing at a pretty rapid rate, the sort of rate that we saw in China 15, 20 years ago. And part of that, of course, is they get more and more integrated into the global economy with product being exported to everywhere. Suddenly, you start finding that from January this year, the standing to delivery on COMEX is just going absolutely crazy. I haven't actually sort of calculated it recently, but something like 1,500 tons of silver has been stood for delivery on COMEX. I mean, this is a huge quantity if you think about it. And I think that, this is down to, if you like, these Indian companies like Reliance, who just can't get their silver elsewhere. So what we're seeing is that the control that China has imposed on the silver price for the last 20-odd years is now being eroded. They are now losing control of the silver price because of what India is doing. And this is happening at the same time as China in particular is selling dollars in order to buy gold. And other Asian nations are doing the same. So there's an element of moneyness, if I can invent a word, coming back into silver, which I think could well mean that not only does it outperform gold by, the sort of roughly nearly 2 times, which is the sort of volatility relationship, but I can see it actually having to correct that suppression, if you like, the suppression of price for the last 20-odd years by China. That could be quite dramatic. So anyone who wants to play catch-up with precious metals could well consider using China as the route into gold, if you like. And what I would do under those circumstances is look to buy silver, and at some stage, when it has risen significantly, then exchange it for gold, and you will get probably twice as much gold as you would if you just bought gold now. So silver, I think, is exceptionally interesting in that context.
Despite some negative media coverage, it's essential to recognize the robustness of the Chinese economy, which ranks among the strongest globally. According to IMF projections, China is expected to achieve a GDP growth rate of 4.6% in 2024, second only to India's 6.8% among major economies. This growth outpaces forecasts for the US, Euro area, and Japan, highlighting China's economic resilience. Bloomberg's analysis indicates that over the next 5 years, China will contribute to 21% of global economic growth, surpassing the combined contributions of all G7 nations. Alasdair Macleod emphasizes that China's economy, driven by high savings rates, allocates an impressive 47% of its GDP to savings, amounting to 18 trillion yuan. This substantial surplus is particularly directed towards investments like gold. The strategic accumulation of gold by the Chinese central bank, which now surpasses other central banks, signals a shift away from U.S. Treasury holdings, significantly impacting gold prices. This change is partly due to geopolitical concerns, with 10% of China's savings, roughly 11,000 tons annually, being directed towards gold. The demand for this precious metal is substantial, and the central bank's actions are closely monitored by Chinese individuals, indicating a deliberate shift from dollar assets to gold reserves. Alasdair Macleod points out that while it may appear that China is actively purchasing gold, it is strategically reducing its exposure to the dollar to bolster its gold reserves. This proactive strategy reflects China's response to global economic uncertainties. Let's return to the interview for more insights.
Bear in mind that China has a savings-driven economy. It's calculated that the rate of savings is, I think in 2022, which was the last figures which I've seen, the savings rate was billed as being 47% of GDP. Now just think about that for a moment, 47% of GDP. If you just look at those numbers, 47% of 18 trillion. And just assume that 10% of that is invested in gold. That works out 11,000 tons. 11,000 tons. This year, next year, the year after, whatever. There is a huge underlying pressure because investment alternatives are unattractive or less attractive to the Chinese. We have to modify that figure, actually, to be more sensible, to talk about the people who you saw in the video queuing up, ordinary guys queuing up trying to buy, gold marbles and stuff. Household savings work out at considerably less than that because it is part, if you like, of the total savings number. And I calculated that, again, 10% of those, if that was put into physical gold, at current prices, we're looking at 3,000 tons. Now, that is roughly global output. And it means there's nothing left over for central banks to buy, and they're in their buying record. There's nothing for anyone else in Asia to buy, like the Indians and, the Saudis and, all the rest of them, the Russians as well. So you can see that, suddenly there is quite an appetite there. Now, on top of that, there is another factor, and that is that while the Chinese are enormous savers, I mean, we're talking about, in this sense, they're taking a long-term view. They are also the maddest punters in the world. I mean, they love to have bets. They love to, sort of speculate, if you like. So, you've got the guys with actual money, thinking, right, where are we going to really make money? What can we bet on? And if they're not betting on the number of lumps in a sugar bowl, they go into the futures exchange and they will buy paper gold and ramp up the prices. And of course, that means that the banking system, the bullion banking system, as it were, ends up short futures on the Shanghai futures exchange, which it has to cover elsewhere. And we see this going through London. We see, when there's been sort of big demand overnight in Shanghai, you find that in the run-up to and around about the time of the London morning fix, gold is going up. But also it spills into COMEX as well. So you see that, when that opens too. So this is a factor which is not going to go away.
If China loses its ability to suppress silver prices in the future, we could see a significant surge in prices driven by genuine market forces. This change might initially increase market volatility as traders adjust, potentially influencing both investor behavior and industrial demand for silver. Share your thoughts on Alasdair Macleod prediction in the comments below. Also, make sure to like this video, subscribe to the channel, and turn on post notifications for more updates like this. Until next time,